Blockchain Real Estate Podcast, sponsored by the Blockchain Real Estate Summit. If you're interested in the intersection of real estate, blockchain technology, AI, and more, you've come to the right place. Don't miss your opportunity to attend the Blockchain Real Estate Summit 2024, happening this September 24th through 26th, online for our worldwide audience. Get your tickets at blockchainrealestatesummit.com/registration. Enjoy the show.
Hello and welcome to another Chicago Blockchain Real Estate Collective meetup. I'm your host, Adam Carswell, joined as always by my co-host, Michael Flight, CEO of LibertyFund.io. If you guys are joining us today live, thank you for investing your time. Happy to have you here. Really excited for today's presentation. Definitely going to get a ton of value out of it. And if you're joining us on the replay, be sure to subscribe and check out the show notes and links connected to today's message. And if you're listening on the Dream Chasers platform, be sure to rate and subscribe there as well. Links, as I mentioned, are all below. So today, our presentation and the focus of the meetup is a luxury resort on the blockchain, a successful start to finish case study. Again, as I mentioned, super excited for today. Going to get a lot out of this case study. I know even as us as the hosts today, we have a lot of questions in the pipeline for Mr. Laurent Chemla. Before I give you Laurent's bio, I want to hand it over to Michael to kind of just explain the backstory on how we connected with Laurent and how we got to where we are here today. So, Michael.
Yeah, I can't tell you how excited we are, because when we were originally searching and eventually, figured out that we would have to be issuing a security token and getting into security tokens. One of the largest and the most visible projects was the La Estancia security token. And they've also got really good SEO, so it always comes up, towards the top. But through La Estancia and their website, we actually met our blockchain and a securities attorney, Bull Blockchain. So want to thank Laurent for that. And we've just, in discussing things with him, just I can't tell you how much value we've gotten. So really excited about this. And with that, I will, turn it over to you, Adam, for the introduction.
Awesome. Thank you. All right, guys. So Laurent Chemla of Estatoken or Estatoken.com. He is a serial entrepreneur and investor with more than 25 years of experience building and managing successful companies in the digital realm. He's the co-founder and chairman of Real Deep Group, the first B2B marketing digital marketplace for trading TV and film rights, and RealTrack, a blockchain-based decentralized universal registry for the audiovisual industry. As CEO of Estatoken, the full-service marketing firm focused on real estate digital security offerings, he pioneered the tokenization of La Estancia Golf Resort, located in the Dominican Republic. He sits on the board of Stango One and a leading offshore digital production center with over 280 employees based in Sofia, Bulgaria, with offices in Serbia, London, and Paris as well, which is where he's joining us from today in Paris. So going overseas for you guys. Laurent has been featured in multiple publications and been a speaker at MIPCOM, the Security Token Academy, the TV of Tomorrow, online advertising and Jupiter events, and at the Canes Cyber Lions. That's the background for you guys. Mr. Laurent Chemla, thank you for joining us today. And now the microphone is yours. And I think we have you on mute. Gotta love Zoom. You're still on. We still got you on mute.
Okay.
There we go. All right.
I'm good. Okay, great. So good morning, everyone. And thank you, Adam, and thank you, Michael, for this great introduction. I'm very happy as well to have been invited to share with you this sort of case study on our experience with La Estancia. And as Adam mentioned, I'm a serial entrepreneur, although I don't really like that term, which usually is associated with killer. But with that being said, I've had a wide experience in technology, and I got involved with blockchain technology through other ventures that I invest in, one of which is in the audiovisual space. And when we were approached by a very large developer in the US based in Maryland called Signal Corp, we started exchanging about the potential of tokenizing assets and understanding that obviously the real estate industry, like many others, were being disrupted by this new technology, by digital ledger technology and blockchain. And so by looking closely at their portfolio, they have about 200 million of assets under management currently. We thought that Estancia was not only a sexy appeal as a project, but also did have a great potential financial return, which made it a fantastic candidate for tokenization. So I'm going to share a presentation and start. I prepared a presentation here to share with you. Tell me if you can see my screen.
Yeah, looking good. And one more thing, just want to remind everyone along the way, any comments or questions for Laurent, because we will get to the Q&A, just remember to put those in the chat. Go ahead,
Perfect.
Laurent.
Thank you. So before we start diving into the case study itself, I'll give you a little bit more background about what Estatoken is. So Estatoken is essentially a digital marketing firm that is focused on real estate-backed securities offerings. We help issuers market their tokenization to investors around the world. And so we started doing this with a few clients, Signal Corp being one of them. And now we're developing a technology platform. Think of it as a Google Ads for digital securities, which will sort of automate the process of marketing to a digital pool of investors internationally. We've come to realize that there's really a fundamental disconnect between real estate investments and new class of investors, the millennials, so to speak, that are not investing as we are and as we have been. And so therefore our approach really is to bridge the gap between real estate developers, property owners, and this new class of investors by doing it with in a compliant manner and an automated fashion. So the idea is really to try and connect with platforms that are full of digital investors today, the BlockFiles of the world that you've all heard of, the Robinhood that are doing fractional investments now into actual shares, but also neobank platforms that are emerging around the world, like N26, Revolut, SoFi, and so on and so forth. So essentially, we're meeting cross-border crowdfunding, which I think is the big plus here in tokenization, is being able to go across borders in a compliant manner by using platforms that allow you to do this, and bringing the best of both worlds by bringing into play blockchain technology and smart contracts. The market opportunity is obviously huge. We've got, according to CNBC, $38 trillion of wealth that is changing hands currently from baby boomers to millennials. These are the new investors, and the whole concept and notion of investing or owning a property is now changing. Our kids are not investing the same way as we have been, or clearly as our parents and grandparents have been. So the idea here is to see that the largest asset class that real estate is, 240 trillion according to latest figures, is going to be tapped into in a different way, because there's a lot of unrealized liquidity premium in there, and specifically in commercial real estate. According to a recent CBRE study, we have about 48 trillion. And on the same time, you're seeing the emergence through those figures that you see on the right here from Fidelity Digital Investment, that 32% of investors are seeing alternative asset class, among which security tokens are part of, as a potential investment in the future. So I don't know how many of you are familiar with real estate tokenization and tokenization itself, but in summary, tokenizing an asset is really a securitization process. So you're bringing shares and you're encapsulating rights within these digital shares, those digital shares that are recorded on the blockchain in what's called a digital ledger technology that's totally decentralized, so it's immutable. And on the same time, it can automate a certain number of operations, like distribution of dividends, but also managing the cap table, and compliance among various parties, which I think is a big plus here. So by doing this, you're bringing a lot more efficiency, which in turn can be passed on to the investors and making it a much smoother process. So really, we shifted from paper shares to bits, be trading on the stock market, to now tokens, which is really a set of cryptographic numbers that are recorded on the blockchain. What are the difference between security token and utility token? I think it's important to understand that if you have a property asset rights, on the security token side, usually security token entitled you to earning income from the property, whether it's rental income or it's sale income, the right to transfer the property share to others, and the right to enforce certain property rights if that's been embedded in, again, the smart contract as part of the governance rights of the structure issuing the tokens. On the other hand, utility tokens don't give you those kind of benefits, but they can give you other benefits. And we're seeing in real estate certain kinds of utility token being issued that allow you to use or occupy your property on a timeshare basis, having certain benefits in staying to some of them. So our focus really right now is prime commercial real estate assets and development. Number 2, trophy residential properties, and number 3, branded luxury properties. I'll pass on this because I think that's a little bit too much. Let me dive into the actual case study and how we went about the tokenization of La Estancia. So first of all, La Estancia is a beautiful golf resort, but first and foremost, it is an income-producing portfolio of residential assets that have the particularity of being under a commercial lease agreement. And that's very important because you have the security of the long-term lease with a single tenant, but on the same time, having this occupied with residential properties. So again, 1,000 acres golf course, 5-star, developed by Pete Dye, fully developed properties that are combining luxury villas, golf cottages, townhouses, apartments. This was all developed, as I said earlier, by our partner and client Signal Corp, which is a US-based in Maryland development firm with more than 35 years of experience, and they've done about 3.5 billion of transactions. Again, 200 million of assets under management currently. And the strategy for La Estancia is really a 3-part digital offering. We completed last year the first part, which I'm going to show you, but there's really a 3-stage investment plan that will total more than 75 million in accumulated offerings. What made La Estancia really, I think, a very interesting opportunity is its location, because Dominican Republic may not be well understood or well known, but it is an island in the Caribbean, but it's a country. And even though it's not as big of a country as probably some of the Southern American countries, is often compared to the Latin America of the Caribbean, because it has this vibe. It has got this feel of Latin America. It's Spanish speaking, obviously, and the resort location is wonderfully located in the southeastern part of the island, which you're seeing here in a location called La Romana, which was very conveniently located because it was 30 minutes away only from Punta Cana International Airport, which itself is 2.5 hours, or 2 hours, sorry, from Miami. So it's very well located also in the region where there was another very well-known resort called Casa de Campo that's been successful with a lot of billionaires, a lot of stars own properties there. And we're right across the river there called the El Chavon River. So it's great property for golfers, but for vacationers as well as upscale residential. So let me show you a movie here that we produced. I don't know if you had a short clip that we produced that's about a minute and a half. We'll show you a little bit of property and the environment. Can you see the video? Is it playing? The sound also?
Yeah, it's playing. We're not getting the sound.
It's probably because I have the sound in my ear headset. So I'll sing about the music.
No, yeah, give us the play-by-play here.
So basically, you're seeing right now the 5-star golf resort. As you can see, it's a beautiful property. I'll get to it in a minute, but it was 10.7 million portfolio of properties that we assembled in that first stage. And it's very nicely designed because as you can see around the golf course, you have the golf cottages there, which are 4 bedrooms, 4 bathrooms that were part of the offering. What was very interesting, and I'll speak to it in a minute, was the benefits also included in that sale, which are residency and citizenship benefits if you met certain requirements from an investment perspective. Obviously, also the very interesting aspect is as a digital securities offering, it's highly liquid. It allows you to get trade on net asset value plus when it will be traded on exchanges soon. And also provides you with its location and the SPV that's behind it from exceptional tax benefits. So I'll move to the rest of the presentation. Without further ado, what I think really differentiates La Estancia, I couldn't have said it better than Armando Signorelli, who's really the CEO of La Estancia Holdings and also of Signal Corp, is the unique location, the tourism, but also the revenue stability, which I mentioned earlier, having been really a commercial lease agreement in that residential property. Who is really the tenant is a very large audiovisual firm. Obviously, the settings are perfect backdrops for production. They produce shows there internationally. They're affiliated with Fox. They've actually taken over the whole resort in terms of occupancy. And they are now asking for doubling by 2022 occupancy, which prompted really developers to develop additional space. It's 1,000 acres. It wasn't fully developed in terms of space, so there's a great opportunity to have them occupy this. So they produce shows you might be familiar, like American Ninja, Estatoken, which is their own brand, and they sell this internationally in Mexico as well as in the original country of origin, which is Turkey. So why the Dominican Republic? As I said earlier, according to a recent study from the United Nations, it's number one. 3.5 billion of foreign investments have been made in 2018. As you can see, it's way ahead other countries or islands in the area. Number of visitors have been climbing on a regular basis. Also, the GDP growth is substantial. It has increased 5.4% in 2017, 2018. The main benefits, I think, of the investment opportunity was to own a fractional state. So we assembled to test really this, as I said earlier, is the first of 3 phases. We wanted to test in that first phase, assembling a diversified portfolio of some of the units you've seen in that video, composed of cottages, of villas, of apartments, as well as townhouses, and 22 income-producing properties, generating an 8% annual return, and with a targeted IRR, cash on cash, of 36% in 3 years with the sale of those properties. The additional benefits, as I mentioned earlier, are citizenship and residence benefits, which I'll get to in a bit more detail in a minute. So the properties, as you can see here, I'll show you a breakdown. We essentially put them all under the same entity, which was an SPV. I'll get to that now. So basically, the structure here is a Cayman Island company setup, which is an SPV made specifically for this offering. And the Cayman Island is essentially composed of a GP and LP with specific class of shares that were issued, equity. Underneath that, the LP owns shares in all the various corporations in the Dominican Republic that are consolidated under that same, again, roof, which is the SPV. And we issued that special class of common stock, Class B, which has only strictly economic benefits, no voting rights. And we essentially mimic those shares. We use those shares essentially as a digital representation through the tokens, the security tokens, digital securities. That's how it's structured, or it was structured. And we offer the ability for investors that wanted to get shares, but to convert at a later stage to digital security tokens, the option to do so. Because some investors, I got to be honest, were a bit cold feet. We're like, what are we getting exactly? What are those tokens? We're not prepared to receive tokens. When we have to own a digital wallets, what is that? And so on and so forth. Especially if you speak to the more sort of antiquated family offices, you know, they're not really prepared to buy into this. But so we gave them that option, and we structured our subscription agreement to have provisions to allow them to convert at no penalty. From an onboarding process, we partner with Securitize, by the way, which is a leading platform. You guys probably have heard of it, a compliance platform that enabled us to really maintain compliance throughout the whole life cycle of the token, from each issuance and a first issuance basis to later on as it gets into secondary markets, which is the objective, continue to have that compliance to their protocol and their relationships with those exchanges. So the investment could be made both in fiat currencies, US dollars and euros, as well as cryptocurrencies, Bitcoin, Ethereum, and the idea was that they would essentially go and review on the securitized platform, the PPM, the subscription agreements. They'll go through a KYC, AML, which is know your customer, verification of profile, which was automated through their partner on FIDO. And at that point, they start pledging an investment amount. And as they conclude this investment, it gets placed into an escrow. We had partnered with Paxos as our escrow provider, which also allowed us to have more flexibility and no volatility in accepting cryptocurrencies. Because if you accept Bitcoin and all of a sudden the next day the value drops 20%, until the actual realization of the transaction, you have a big problem. So we converted those cryptocurrencies immediately into US dollars and left them into the escrow account of Paxos. From there, the common stock, as I explained earlier, we're issuing through the smart contracts, the digital security token, and we're placed in the custodian of Paxos until the sale was completed, meaning the PPM was executed and the subscription agreement, and at what point the tokens are disbursed to the investor's wallet. So again, it's a three-phase investment. Phase one was completed, was 22 units. Phase two are apartment buildings, townhouses, and cottages, but now we're talking about 123 units for a much greater amount, because it's going to be 21 million. And the phase three is the hotel development on 100 acres of that property. As you can see here, these are rendering from the hotel that will be there. Will look very nice because they're big suites. 240 suites will be operated by a very large, internationally known brand chain, hotel chain. So that first sale closed by the end of November. It was 10.7 million. It had conversion option, as I mentioned earlier, and also we provided preemptive rights to the next offerings to token holders, which was a benefit from a marketing perspective. We had a lot of press. These are some of the articles. I was interviewed by the Financial Times in their Investors Chronicle, where I coined the term REIT 3.0. We were in Crypto News, interviewed by a number of media. So it got a lot of coverage, I think, again, due to the sexiness and the fact that we were pioneers in this, of course, after the St. Regis and a few others that had started this process before us, but I think we were among the first ones. The second phase, as I said, is going to be even greater return, and that's going to launch, hopefully, COVID providing next year, because everything has been slowed down by Q2 2021. The new hotel development will be launching hopefully by the last quarter of next year, and that's going to be again 240 suites, 900 square feet suites. It's going to be a hybrid debt and equity structure offering. The first one was just equity, as I explained. We're going to have even projected or targeted cash-on-cash return are even higher, and many additional benefits like the ability to get discount as you hold tokens to stay in a hotel, and a number of other sweet things. So what's next for us, as a stake token? We are working now on the tokenization of a very large commercial real estate property in the US. It's a Class A trophy asset, LEED certified building, fully occupied. 120,000 square feet under a 10-year lease, single tenant, KCI Technologies, which is a very large civil engineering firm that works for the US government. Very stable. It's got a 6.3% cap rate, and we targeted 22.5%, IRR, targeted IRR within 3 years. We also have a huge pipeline. We were solicited a lot by a number of real estate developers and asset holders around the world, whether it's in the tourism industry. We have a hotel, a part of Relais Chateau. We have properties in the Golden Triangle in Paris, which is the most prestigious area of Paris. And we have a few properties in Manhattan, also a very large development in Harlem. So these are all in the pipeline. A lot of these things have been sort of slowed down due to COVID, but they're now slowly starting to resume. So we're expecting a lot of new stuff coming out. So anyways, this is it. I'm now open to your questions. So feel free to shoot out, and hopefully it wasn't too overwhelming and not too much information at once.
No, fantastic information, Laurent. Thank you so much. I know we've got a lot of questions coming through, and I apologize. My connection timed out, so I lost half of the questions in the chat. I know we had Dalton, Michael, and then I've got some from Jason. So let's just, if you guys are available, we'll go through here and unmute and ask Laurent questions. And also want to keep in mind we have roughly 15 minutes left. We might go a little over just because this is going to be a really powerful Q&A, but just want to make sure everyone's cognizant of how much time we have. So Dalton, I think you had the first question. If you're there, could you unmute and ask Laurent?
Yep, I'm here. Hey, Laurent, I think we spoke before too. I think maybe a month or two ago. So nice to talk with you again. But one of the questions I had is, are there any companies that are securitizing luxury residential assets for investment purposes, but also for personal use, kind of timeshare benefits? And then I saw that you said that there's residency and second citizenship benefits as well. So I kind of wanted to touch on both those things.
Yeah, right. Yes. Hi, Dalton. Yeah, I do remember you, of course. Thanks for the question. Yeah, so for your first question, yes, there are, from what I understand, there are hybrid models between utility tokens and security tokens that are being issued, because once again, those sort of time sharing capabilities have to be encapsulated in a sort of different type of format, from a token perspective. And I heard about a luxury resort in the Philippines that is currently being that is working on such an offering that will be combining not only the sort of security token benefits that you can obtain, like financial aspects, dividend distribution and so on and so forth, but also like you said, time sharing capabilities, the ability to stay at the resort or have certain discount or access certain facilities and so on and so forth. So that's your first question, I think. The second one was, excuse me, remind me.
The residency and citizenship
benefits?
Yeah,
the residency. Yeah. So that's a very interesting aspect. To be honest, when we approached the opportunity with the Dominican Republic, we didn't really know, us as a firm, that there were in a residency benefit attached to it potentially through a program, obviously, of the country called Residency by Investment. And so when we started diving into that and putting together our marketing strategy, because I have a very strong marketing background, we come from digital marketing, so we really sort of like build personas of the potential target investors. And we realized that as we know, many people are interested in a secondary residency, especially after a crisis like this. We realize we want to be able to travel more freely to certain countries. And also there may be a very interesting tax benefits attached to them. It depends. If you're US, maybe not so. I mean, I advise you to consult your tax advisors. I'm not giving any tax advice, but I'm saying that was a very, very important aspect, because we've seen many investors, namely from China, making investments in the US in real estate projects in the past decades, to try to obtain EB-5. I have friends who are real estate developers down in Miami that have been extremely successful doing this with building charter schools, and they've received a tremendous amount flow of cash coming from there. And it wasn't really because they loved the project itself, is because really they wanted to attain citizenship through the EB-5, which is green card in the US. In our case, the citizenship, I passed on it a little bit too quick earlier, so I'll come back, but it offers the ability to travel within 65 countries. among which the Schengen space, as well as Canada, which is very nice. Not the US, but you know, a lot of people that would want this are maybe not also US, maybe US residents. And the threshold is really to make an investment of $200,000 or more. But the process is extremely fast. Within 3 to 6 months, you obtain residency status. And within 2 years, you can get a citizenship and passport. And that's sort of automatic. And the beauty of it is you don't need to keep the funds. So meaning if you have your token and you've obtained residency status, then you can sell that token to someone else and the process continues. You don't need to keep that investment in place, which is great because as we know, the whole approach to tokenization is also the ability to make this extremely liquid. So if you want to have liquidity opportunities in selling this and you still want the sort of residency benefits, you know, you don't have to be attached to the investments or stay or keep your investment for a very long period of time. So having said that, you know, I think this opened our eyes on many, many opportunities around the world in countries where there were great real estate assets with a lot of liquidity premium that was trapped into the value of the asset. And on the same time that offered great residency and citizenship benefits. So we approached one of the largest firms around the world that providing golden visa opportunities that have agreements now with many Caribbean countries, you know, the British West Indies and others and islands, to try and basically combine offerings of investments where people would invest from abroad, cross-border, using token technology, I mean, blockchain technology, and on the same time not have to deal with all the hassle of flying there, of signing contracts, of owning the property themselves, of worrying about property management and all those aspects. So you get the best of both worlds, or you get liquidity, you get dividends, and you also get residency benefits.
Awesome. Thank you, Laurent. Thank you for the question, Dalton, too. Got a lot out of that.
Thank you, Laurent. That was excellent.
Michael, you're next. I think you had a question about Signal.
Yeah, Laurent, I'm curious, and probably we don't have to go too far into it, but did they find you or did you find them? How did you guys meet?
So I met with the principal of Signal through common friends, and we started talking about, you know, what I was doing. So I gave him a little bit of background, my tech experience, and I spoke about blockchain. And then, you know, he was very curious about blockchain technology as it applied to real estate. And he said, you know, what are the use cases for real estate? And I said, you know, as you can see, real estate is being disrupted, you know, slowly but surely. It's being disrupted by blockchain technology. It started with the sort of more basic approach, which was registering, using digital ledger technology to register transaction and replacing sort of like the registries for title ownership and so on. And then he said to me, what about tokenization? You know, we have assets, you know, can assets be tokenized? And I said, absolutely they can. Look at what the St. Regis just did. The St. Regis had just completed at the time their token sale. And so that's when we actually look into their portfolio. I did a little bit of due diligence on them. I tried to understand a little bit what they owned, you know, the assets. We went back and forth a lot, by the way, on the Dominican Republic and the US. Which one should we start with first? You know, what was the best angle from a marketing perspective? And I think, I'll be honest, in hindsight, I think probably that we should have been starting with the US, even though the regulatory environment was a little bit too complicated. We still had to face it, you know, with US investors being based in the Cayman, so that didn't change too much. Yes, there is, again, the sexiness of the resort in the Caribbean, but a lot of people did not understand where the Dominican Republic was. You had to really educate them. They had a lot of worries about the economy, of the people, of safety, all those aspects. And again, La Romana was sort of like a country within the country. You know, if you go there, you know, it's like you feel like you're in Miami Beach. You know, I mean, it's like it's extremely safe. It's extremely luxurious. You know, but it was very, very difficult to convey all those points to them. You know, so it made our task harder because it wasn't an easy product to understand to begin with. Not by its nature, but the country itself and the economy.
And I just have one follow-up question. So this one was not available to U.S. investors, correct? It was only available to the rest of the world.
So we divided the sale in two parts. We did first a private sale, and that we opened to U.S. investors, only qualified investors per the SEC definition. And the second part of the sale, which was really the public sale, was closed to U.S. investors.
Okay.
Thank you, Laurent. Thank you, Michael. Jason, I know you had a handful you sent me here, so I don't know which one's your favorite, but if you want to ask,
I'm trying to be
go ahead.
respectful. I could probably talk to Laurent for an hour here, but I'm curious, what were some of the main lessons, takeaways, or maybe things that surprised you with marketing and issuing this token, as far as not only issuance, but kind of onboarding? Any main takeaways that you came away with that were important or maybe shocked you?
Yeah, sure. We expected this coming from technology and being very familiar with technology platform. I expected the technology to be more mature, and I was fairly disappointed at the time, by the fact that there was a lot of disconnect between the various platforms or service providers. I named a few during the presentation, and I don't mean to blame them when I'm saying this, but I think they were just in a phase where they were themselves inventing this, and with the regulatory environment being so uncertain, and not ideally suited, I'd say, because again, fairly antiquated. If you think about it, the latest big innovation in real estate investment, it was the REIT. And the REIT dates back probably in the 80s. It's about time that we start, taking advantage of new technologies, So I think the disconnect of the platforms, we expected platforms to be able to talk to each other, like custodians, the compliance platform, the onboarding, the whole aspect connected to KYC, AML, all this wasn't really greatly put together, so we had to sort of do a lot of things manually, and so that sort of defeated the purpose of having this whole thing to be automated, right? Where you want this to be completely automated, compliance, onboarding, and so on and so forth. On the marketing side, I think what's very important is that, again, we cannot forget that we're dealing with financial products here that are highly regulated. So as you go about marketing this and those tokens, you don't market them the same way you would market a shampoo, or a car rental company. There are many regulations you're subject to, which is also the whole mission of what we're doing here at the Estatoken, is really building in that platform the automation, the same type of level of automation you're seeing in a platform like Securitize for the onboarding, but from a marketing perspective, where you have a white list of investors around the world that are pre-ready to onboard, where we know their target investment profile, what they want to get into, and you're able to tap into those investors in a way that's close to programmatic, if you will, where you want to set specific criteria and then they can go, and that doesn't mean you will have 100% conversion. That's not what I'm saying, but I'm saying get to a stage where it's not manual, where you don't have to lead campaigns manually. So that's also, I think that these are the two main aspects that I think would be takeaways from our experience.
Oh, that was great. And I've got just one really quick one, just out of my own curiosity here. For the investors that you onboarded, what would you say, just kind of, and you probably don't have the numbers in front of you, but the ones that are receiving distributions, is it 50-50 fiat to crypto? Just curious if you had something there that.
Yeah. So it's roughly, I don't have the numbers like you said, but it was three quarter in fiat and a quarter in crypto, roughly. And we had some large transactions coming into crypto. So even though it's a quarter of the investors, may not be the quarter of the amount, but we thought that maybe crypto investment was going to be a bit higher percentage of investors. We thought that due to the nature of the product, the technology, you would appeal to investors in those platforms. I think once again, it was because it was so difficult to market to them, because as a first issuer, going and tapping into those platforms, which is really our focus eventually, those platforms that I displayed here, these are the kind of agreements we're trying to set up, with our platform. Those people who are basically the millennials of the world, investors who will invest $1,000, because I think the true realization, the holy grail of crowdfunding is really having millions of investors investing a small amount in real estate technology. I've heard stories here of people who say, yeah, I've run a test for crowdfunding in real estate and I've completed a raise successfully. And I said, how many investors do you have? They said 3. I said 3, that's crowdfunding? I mean, that's a small crowd.
Yeah.
So I think we really want to get to that, and for that, I think we're seeing those platforms again. We're dealing with a regulatory environment that is complex, that is begging. I think the framework is improving. I think we're seeing updated definitions by the SEC of accredited investors, of a number of things. So I think it's going in that direction, but it's still not ready yet. So
no,
yeah,
that's feedback.
I just wanted to jump in and, the actual REIT Act was in 1960. And the reason why I remember is because the REIT Act was part of the cigar excise tax. So that's how they make laws here in the United States.
Interesting. So we have to find a new brand of cigar that fits security.
Exactly. And then, you smoke a cigar and, invest in a REIT.
Well, we have great cigars down in the Dominican, that's for sure. Even at our resort, there's a very nice cigar shop that's affiliated with it. It's a major cigar production there. So maybe we'll find a solution there. Well, I invite you all down there to smoke a few cigars and enjoy the golf course.
Awesome.
Thank you for listening to the Blockchain Real Estate Podcast, hosted by the Blockchain Real Estate Summit. Don't forget to sign up for the Blockchain Real Estate Summit 2024, happening this September 24th through 26th, online for our worldwide audience. Get your tickets at blockchainrealestatesummit.com/registration. If you enjoyed today's episode, please make sure to follow the Blockchain Real Estate Podcast on your favorite platform and leave us a review. Your feedback really helps increase the visibility of our show, allowing us to reach more listeners like you. If you have someone in mind you would like us to interview, you can go to blockchainrealestatesummit.com and leave a comment.
Adam Carswell, the voice of liberty. This podcast is solely intended for informational and entertainment purposes only and is not intended to provide tax, legal, investment, or accounting advice. You should consult your own tax, legal, accounting, or investment advisors before engaging in any transaction or undertaking. Thank you for listening to the Blockchain Real Estate Podcast, which is a part of the Blockchain Real Estate Summit Network. Go to blockchainrealestatesummit.com for more information, free reports, and giveaways with free stuff. Thank you.